Yo, what's going on, everybody? It is Thursday, August 10th. I want to talk about today. Even though I always speak to you guys about staying consistent with the big macroeconomic picture and having patience and avoiding short term trading, there are times when you really can take advantage of short-term swings if you understand, for example, the behavior of, the crowd, what I like to call the monetarist zombies. I mean, today was a classic example of it. And again, although I always counsel you to stay focused on the big picture and the macro fundamentals, and of course the fiscal flows, which I always call the first derivative of all economic activity. There are opportunities if you like to trade. You just got to wait, for those right moments. And that's why I'm going to talk about today. I think today was a great example of it. So today we had the CPI number and it came in, really kind of benign. And you could predict from that the reaction of the monetarist crowd, of the monetarist zombies. I mean, this was classic, what I like to call headline trading. Like they saw the number, they all jumped in. The market, the Dow was up over 400 points, very early on in the open. I sent out an email to my subscribers. I said, this rally is not going to last. And it was a great opportunity to go short into that rally or to raise cash if you wanted to raise cash, because, this is so easy to predict what their behavior is going to be, because for them, the benign CPI reading was, the meaning for that was that the almighty Fed God is going to maybe, hopefully in their minds, they're pleading, they're praying that the almighty Fed God is going to stop with the rate increases. So again, it's a single variable focus all the time for these people. And even that one variable, they don't really understand it. Like they did not understand how rate hikes were going to actually be bullish for the economy, in the sense of how they equated to these large fiscal transfers of interest income. And we see it. We see like the growth rate now, Q3 growth rate is expected to be over 4%. I mean, it's really strong. And I've done videos in the past where I have cited the Reagan presidency. When Volcker jacked up rates to 20%, during the Reagan presidency, his first term, interest income transfers were the largest component of GDP. And Reagan was known for big defense spending increases, but it was really interest that powered the economy higher. I've said this so many times in prior videos, and I've tried to give you some perspective on this, that we had the same exact situation, and that created what many refer to as the Reagan boom, and they thought it was due to deregulation and this and that, but in reality it was Volcker's crazy interest rate hikes that just translated into massive fiscal transfers, and that's really what gave the economy its boom. Same thing happening going on right now. But what I was saying, getting back to what I was saying, like if you wait for these opportunities, first of all, I always say go against the headline traders. Go against the headline traders, because for a number of reasons. Number one, people who trade like that, they're pure emotional traders. All they're doing is going off of some media headline without any real understanding of any kind of a macro environment for the economy or the markets. And they're also operating most of the time on a belief system which is wrong. Usually that whatever that headline is, that's just a very simplistic understanding of some outcome or some environment for the market, and it's usually not what it appears to be, okay? The other thing is that those are weak traders. I mean, when everybody stampedes into, don't forget, for every buyer there's a seller. You have to ask yourself, for example, on a day like today, who were the sellers? The sellers were the savvy ones. I was selling. I sent out that recommendation to my subscribers to sell into that rally, and we gave up the whole 400 points. We closed up modestly higher on the day. But you definitely want to take advantage of these headline situations, and especially if you have more than one, how should I call it? If you have more than one reason or rationale. First of all, chasing headlines in and of itself is a poor strategy. So you want to go against people who engage in poor strategy, number one. Number two, the understanding of the headline or the number, the CPI number, in the minds of the monetarists, that's flawed, that's wrong. They really don't understand it. And again, they're chasing after this. The whole thing is based on hope and praying that the Fed God is going to stop raising interest rates. The irony is that if they stop raising interest rates, well, not if they stop, but if they actually started cutting interest rates, then ultimately that would be negative for the economy, because it's the reverse impact of raising interest rates that would remove income from the economy. The initial reaction would be positive for financial assets, because that discounting effect would operate in reverse, where you'd have higher multiples justifiable for financial assets because the rates were coming down. But at some point, once again, you're going to reach that inflection point where the discounting impact or the discounting effect will be overtaken by the income drain that would occur from lower interest income transfers. But I'm not going to get into that now, because we're a long way from that happening. As a matter of fact, some of the Fed people today were still talking about the need to raise interest rates even more. It's just like, this is Einstein's definition of insanity, right? I mean, repeating the same thing over and over again, and not getting the result that you want, and just doubling down, tripling down on the same thing. So it's funny for me. I just look at it in amusement. It used to piss me off. It used to make me upset, because I was like, can't these people realize that what they're doing is not working? Don't they reflect on their policy? Is there any kind of a scientific method to their madness? There's not. I mean, again, I've said it a million times. It's just an orthodoxy that they adhere to, regardless of what the outcome is. They know no other way to go about it. And that's just ingrained in the institutional thinking of these people and these institutions. So like, I don't get upset, because today is another perfect example. It gives you opportunities for those of you who like to trade. And I'm not saying these things pop up every single day. They definitely don't. But if you look at a calendar and see when there's going to be these important releases, like right now, we know all these monetarists are focused on what the Fed's next move is going to be, and that is tied into the inflation outlook. So when you have a number like a CPI coming up, or when you have a number like a PPI or something like that, or GDP, just be aware that there's going to be a reaction from that. And you could tell right away what the reaction is going to be. I mean, if that CPI number was really hot, they would have sold the market way down, which would have created a buying opportunity. It wasn't hot today. It was the opposite. Actually, that number was mild, and you should have known that they were going to buy it up on the number, and that was going to fade out. Why is it going to fade out? You might ask, well, Mike, why is it going to fade out? It's going to fade out because of what I've been telling you. We hit the peak in fiscal flows for this cycle. And again, you got to go back to fiscal flows, or the understanding that fiscal flows are the first derivative of all economic activity. You got to start off somewhere. Frankly, I like to start with the first derivative. I mean, if you're building a house, you want to start with the foundation. And the foundation for understanding the macroeconomic outlook that's the fiscal flows. And that emanates from policy. So it's kind of like on automatic pilot right now. I've been telling you guys that right now there's like 5 elements to the fiscal outlook, and none of those things are going to come down. I mean, you have Social Security, you have Medicare, you have Medicaid, you have defense, and you have interest income transfers now. And I said that all of those things, with the exception of defense, are non-discretionary. But defense in this country, Congress always treats defense like a non-discretionary item. Whatever the Pentagon asks for, they're going to get. I mean, that always happens in a smooth bipartisan way, both parties. You never hear any haggling or how are we going to pay for it. They never say, how are we going to pay for it? You need $14 billion more for an aircraft carrier. Boom, you need $100 billion for Ukraine. Boom, you got it. Nobody asks how you're going to pay for it. But when it comes to student loans, when it comes to infrastructure, when it comes to Social Security, when it comes to anything in the public good, then that's always, hey, how are we going to pay for it? I mean, it's a gigantic hypocrisy, and we all know what's going on. I mean, it's government capture by these big corporations. And that's just the way it is. But anyway, those are the 5 things, and they're not coming down. And we're running right now at, I've been telling you guys, like about 40, 50%, 30, 40, 50% above what we were seeing during the Trump presidency. I'm talking about these leading spending flows every month, 30, 40, 50% higher than what we were seeing during the Trump presidency. We were running about 420 billion a month. Now we're running close to 600 billion, five something to 600 billion a month. And that's not coming down. That's not going to come down. That's big picture. Like, I mean, you want to be, first of all, you want to be happy when these dips occur, because in a really long-term positive fiscal environment such as the one we're in right now, you can always count on the market recovering and making new highs. You got to worry maybe, like in 20 years from now when the baby boomers all die off, like I'm a baby boomer, right? And the government's not paying much Social Security anymore. It was once described, and I think it was a very apt description, that the baby boomers is like when a big snake, like a python or an anaconda, swallows like a pig or a deer, and it has to, it travels through that snake's body and then eventually gets digested and it's out. So we're traveling through right now. As a matter of fact, in October I'll be getting my Social Security. Speaking of which, this is just on a side note. Ken Langone, who was one of the founders of Home Depot, who I find him to be an insufferable bloviator. I met him several times when I was a contributor at Fox, and he's always bitching about working people and about unions and stuff like that. Look, my father was in a union. He was a New York City firefighter. We saw what the firefighters did at 9/11. They gave up their lives, 343 heroes. I mean, they're really, really heroes. And he was bitching, and I took offense at that. Like, that pension, because he was in a union, that pension was able to support him after he retired, and my mother, And so I really can't handle this guy. But anyway, I saw an interview he did on TV. I didn't see it on TV, but it came up on TikTok of all places, where again he was bitching about getting. He said he was talking to Elizabeth Warren, and I'm no big fan of Elizabeth Warren necessarily, but he was complaining that, hey, why is the government giving me a Social Security check? I'm enormously wealthy. It's about time you address these entitlements. Now, you got to be careful with these guys, because they frame it as, oh, I shouldn't be getting it. But in reality, what they're really trying to do, when he says you gotta work on these entitlements, what they're really trying to do is get rid of Social Security, which is not an entitlement. We pay into that from taxes. So like, what I would have said to Ken Langone is like, first of all, you pay taxes, so you are entitled to a Social Security check. Okay, everybody pays that FICA, or they pay, if you're self-employed, you pay a self-employment tax. Okay, so everybody's entitled to that. It's not about how much money or wealth you have. You did pay taxes into the system, so you are entitled. But look, if you feel so guilty, Ken, about receiving a Social Security check, he gets $3,000 a month, I think that's the maximum, then give it to somebody. Donate it to somebody. Very simple. You don't have to change the system. Just give your check to somebody. I mean, you got to be very careful with these guys, because they're ideologically poised, or they're ideologically determined to get rid of these programs. And these programs have kept millions and millions of seniors out of poverty. So, and this whole thing about it's going to run out of money, which is a bunch of bullshit. I mean, in my course, Understanding the Daily Treasury Statement, I show you where the government of the United States redeems, that means pays back, over 100 trillion annually. And I'm not making this number up. This number is right on the Daily Treasury Statement. You can look at it every single day. We pay back 100 trillion in redemptions of government securities. So the idea that 30 years from now or 20 years from now the system is going to be short 4 trillion, it's impossible. It's all dollars, and the checks are never going to bounce. And this is a non-issue, but it has been raised as an issue, and it unfairly plays into people's fears about the system becoming insolvent. And then even those who are for Social Security start to get worried, and they start to say, yeah, we better do something about it. Maybe we'll take less. Maybe we'll take it when we're older. Maybe we need to be taxed more. That is all false. The system is fine, and it's not going to become insolvent. It cannot become insolvent. So anyway, that's it for today, folks. Another beautiful day here in Southern Cal. And I hope you had a great day. Don't forget, go to my website, sign up for a 30-day free trial of MMT Trader, and I'll see everybody tomorrow. Bye.